Easy Money Selling Options by www.options-trading-education.com. The stock market is in pause mode. You own several stocks that you want to keep long term. How can you make a little extra money with your portfolio? Is it possible to make easy money selling options when you already own the stock? A covered option is one in which you are selling a call or a put on a stock and you own it. A long option strategy can result in easy money selling options. This strategy involves selling calls or puts on stocks that you own. What is a call? A call contract gives the buyer the right to purchase a stock at a set price up until the expiration of the contract. The seller is paid a premium for taking on the risk that the stock may go up substantially in price and that he will miss out on those gains. If the seller is selling short, he does not own the stock, and then his risk is bigger. The seller is obligated to sell if the buyer so chooses. What is a put? In a put contract, the buyer purchases the right to sell a stock at a set price, and the seller gets a premium for taking on the risk of a big drop in the price of the stock. Someone who owns a stock will lose if the price falls substantially, but is covered because he already has a stock to sell. A person selling uncovered puts stands to lose as well and will need to buy at a price higher than the now current market and lose when selling at the now lower market price. Familiarity with your stocks. There are stocks that routinely rise and fall with a predictable channel. You know this if you've held such a stock for a year. When the stock is close to its usual upper limit, selling a covered call option will provide you with a little cash as the stock cycles back downward in its ever-repeating cycle. The only risk that you have is if the stock suddenly and unpredictably goes way up in price. The easy money selling options part of this scenario is that you know the stock and its characteristics and know that the likelihood of a big jump in price is slim. This is a strategy that you can employ over and over again each time the stock cycles up and down within its predictable trading channel. Another way to make easy money selling options is writing puts. Writing is just another word for selling. In this case, the stock that you own is nearing its usual lower limit before cycling back up. You sell puts on the stock and get paid a nice chunk of change on top of the appreciation of your portfolio as the stock predictably rises again. Fundamentals and market sentiment. Those who routinely make easy money selling options typically take a conservative approach. They only sell calls or puts when market and stock fundamentals are on their side, and they keep an eye on the market for changes in sentiment based on fear or greed, as these factors may temporarily drive stock prices beyond what fundamentals dictate. Smart options traders stay out of trades that they do not understand and only take the trades that clearly will lead to easy money selling options. For more insights and useful information about options trading, visit www.options-trading-education.com.